Greetings traders out there in Traderland. It's Wednesday, January 23rd, 2013. My name's Des Woodruff. I'll be your host for the next few minutes here. And it looks like the Dow ends at the highest level since October 2007. The S&P the highest level since December 2007. Continue this rally here. We have the S&P up 0.15%. Not much, but still up. Dow up 0.5%. Now here's the thing you want to pay attention to. Nasdaq up 0.33%, lagging the Dow, but the Russell's in negative territory, 0.28%. So we're seeing small caps starting to pull back and large caps getting more bullish. This is a telltale sign of a topping indication to be mindful of. Banks off 0.65%, giving credence to that bearish activity that we did see today, even though the markets were mainly bullish. VIX up, volatility index, which is the fear indicator, also higher by 0.25%, which puts us at 12.5. So you have banks off by a huge amount and the fear increasing with the small caps doing poorly. And now we have gold down 0.28%, silver up 0.22%, crude oil up by 1.14%, and the US dollar flat for the day. And the trend was bearish to close out the day. So we had a lot of volume flowing into declining stocks. That's what that shows. And taking a look at this, the S&P weekly, you'll see that we had a nice little pop here above some nice resistance, but coming up through some more resistance here. Be watching 1505. That's going to be an area of resistance. Let's go to the daily chart. You'll see this up, and away. We're heading up nicely. But remember, 1505 is an area of resistance. For the most part, hold numbers around the S&P doesn't hold a lot of weight. Let's go over here to the monthly chart of the S&P. You'll see this extreme pop here. Question is, will we get a retraction? And if we do, I could see us retracting back before this month is over, putting us down here at around the 1458 area, which would be a significant drop in the markets. And Apple's getting ready to come out with some news, but Google yesterday did. And let's take a quick gander at Google on the daily chart. It closed the day higher by 5.5%. Had a nice gap up here. Now Apple's is coming out with earnings. Let's see if they come out with earnings yet. We're at 515 on the daily. 515, yeah. So they haven't come out with their earnings quite yet, but it's due out anytime now, and I expect a gap up or a gap down. And good luck to all those who are gambling on this one, buying in today. Not a smart decision. Wait for that news to actually release. Here at FinViz, you'll see that technology did really well. It had a lot to do with Google, but you'll see utilities and financials not doing so well. Middle of the week here, industrial goods doing well, conglomerates, larger companies doing well, and services doing well, but financials laggards here, and that could be problematic. Let's take a look at gold. Redid some lines here, which I think make a lot more sense. You'll see the two big burly trend lines. We're in a massive symmetrical triangle. Now we're caught up in the moving averages. But our main trend lines are a falling wedge heading downward. So what we need to do is for it to chop around here and then break out of this, head higher, and then break out of this major trend line. Be really good for materials if it could do that. For all you day traders out there, keep your ears open. I'm looking to do a market internals webinar. This is not a freebie. I'm going to be giving the good stuff at this. Keep your ears open. Watch your email, because I'll send out an email inviting people to be a part of this very special and exclusive webinar. So anyway, and we're also going to be in Mexico first week in March. Email nitza@groktrade.com for more information. I think latest numbers around 60% or so full already. Hope you can join us. Take care and safe trading.